Okay, hello fellow MEL holders and fellow hot copperites. Just having a look at the MEL chart here. I find charting can be a bit like looking at clouds. Sometimes if you look hard enough, you can see the bull, and if you look hard enough, you can see the bear as well. Sometimes you see both, and you got to work out which one is clearer. Sometimes it just looks like a fire engine, doesn't look like anything. But anyway, I'll just draw this as far as the bottom line is. I think the bottom line goes, I think that 30 cents is, in the big picture, it's a nice round number there, and it starts off with this, hits the bottom of that hammer there, so I think that's a good bottom line. No, we don't like to be thinking about 30 cents when the price is up there, but that's where it is. It is what it is. Draw, here we go. And if you wanted to look at the bear, I suppose you could draw that line there. And yeah, we all would have liked to seen that price go and challenge that line up there, that trend line, and breaking up, but it's backed away from that. So that's another little bear there. And we've got this one here, which I don't like at all. Don't like looking at, but I'm going to. I had that little trending channel there, and that's broken that. So it's yeah, if you wanted to be negative, yeah. If you were just looking at the chart, then you could be negative if you wanted to. So let's go take a bit of a closer look. There's the daily. And that's what I was looking at partly when I got into MEL. I got in around the 53-cent mark, and what I do find charts useful for is as screeners to filter down your research. I mean, you can't research everything, so I find this popped up on one of my screeners, and I went and had a good look, and I liked it. I was using fairly sure I was using the directional indicator, which is, for these sorts of stocks, it's good short term, and it did have a nice short term burst. But I use them more to try and pick a good entry. I mean, a lot of times I'll have a short term burst and then come right back down, but most times I'm usually in the money. Not on this occasion, as it turns out, unfortunately, but there you go. But anyway, that's not why I bought the stock. I bought the stock because I liked its because of its massive potential. And it was really so I wasn't interested in getting out for that, because I'm looking a bit beyond that. Longer term. I'm not a short term trader. The only thing that might have worried me was this little gap here, but it was if it did go and fill, and it actually did, I felt I could tolerate a bit of a retracement. But anyway, I was in. And as I said, this fast movement up from this bottom channel to the top sort of brought it up on the radar. What people were doing obviously was buying this announcement here. And announcement, I didn't think the announcement was that bad, but it was just I don't know what it is about MEL announcements. Sometimes you got to look at them carefully and say, well, is it bad news with positive spin, or is it positive, unenthusiastic positive news? But anyway, it obviously wasn't good enough for the market. The market were buying a bigger announcement, and when the announcement did come out, it just didn't. The market lost interest and had this big sell-off here. Let's have a look at that closer. Where are we? And yeah, but anyway, I wasn't too worried. We had this bit of a hammer here, and there's a little tick there. Had this bit of a hammer here, which its buyers said enough is enough, and it looked like it was going to hold at that 50-cent mark, and still trading within that channel, so it's quite happy. Oh yeah, it looks like it's having a bounce off that bottom channel there. So anyway, I wasn't too worried. Unfortunately, these hammers can be good on the end of the downtrend, but that's going down there. It's really in the middle of this uptrend, and the danger with these long tails is that they're hitting profit stops. So the hammers can be, in this sort of situation, false and not very reliable indicators of a reversal. And that's exactly what happened. It did hit the profit stop of the Australian Small Caps Investor magazine, and they didn't. The update came out on this day here, that afternoon, and then the selling began. And the worst part is that I am a subscriber to that magazine. I love the magazine. I don't hold any of its positions, and I had a rule that I wouldn't take any existing positions, and probably wouldn't take any positions at all. I just like it. It has other useful information in there that's relevant to my trading. So but this came up on my screen as separate to that, and it just so happened to be part of that subscription, and I didn't actually go. It was a mature position. I didn't go back and read what they had to say, because I wanted to check things out for myself and not be biased by someone else's spin. But anyway, it just so happened to be on there, and I thought, oh, well, good, that's good, I thought, but really wasn't that good, because problem with taking an existing or mature position in a publication is that it's coming closer to that time when they want to be taking profits, and I've been burnt that way before, and I should have known better. So I'm really ashamed. So half of me is showing this as showing my losing position as a form of punishment. Don't do that again. But anyway, but having said that, I love the stock, and I like the potential. Like I say, I love the stock. I like the potential, and I think it's so. Did I? So obviously I didn't sell out here, and I do see this as cheap buying. Should I buy more? Well, I don't believe in buying losing positions, or positions going down, adding to them. I think because they can go down further, obviously. Like adding to accumulate your winning positions. But having said that, I'm not dumping it either, because the reasons I bought in haven't changed. So even though part of me wants to buy in more, and I've already got exposure to that stock, and there's no point adding to it. I'm already taking the risk by not taking it. I don't use automated stop losses. I use more time stops, like 3 to 4 months down the track, and then reevaluate. So I protect myself by not betting the farm on any one position. I mean, if I had squillions of dollars invested in it, then it, as a proportion to everything else, then it might be a bit different story. But anyway, let's go and have a look at the see if we can see any silver lining in the cloud. And I might just bring up this is the daily stochastic here, and you can see here that it's definitely in the oversold position. So if you were buying, it's not a bad spot to be having a look at. You'd want them to. Hang on, so I just brought that up on its own. Oh, hang on, what have I done? You can see they're trying to cross up there. There's been that little crossover there, but so it's not. I mean, it's not up here. So it's in the spot where you want it to be crossing up from. So that's it's a little bit of a little bull there. The other thing I like is that at this 45-cent marking, I'll get rid of these. Get to some of these lines. You can see it wanted to hold the 50 there, and then this candle here where they fought back, the buyers fought back. One good bit of news is the director buying at this 45-cent mark. I've got this, and I've also got this key resistance point here at 37, before that big one at 30. I've got this key resistance line here at 37, so I think that's in the short term, that's so you've got to be aware of that. And then we've got this 45. Yeah, I think is going to be another key point because of the that's where the director buying happened, and it was significant buying. So it's yeah, the directors are really putting their money where their mouth is there. So I'm thinking, and as it's hitting that line there, well, it bounced off there on that hammer there. You can see as it's hitting that line that you see these other hammers forming here. There's one there and there's one there as well as the buyers claw their way back up. So I think that's actually quite a good sign. There may be some, and a lot of this may still be fallout from that from the ASCII report. So I'm hoping that that's going to finish. But I think generally speaking, I read this as the market thinking that 45 cents is anything buying at a discount to what the director bought them for would be cheap buying. And so I think there's a little silver lining there. I think it certainly helps me. My emotional fortitude, I was going to hold anyway, but it's yeah, that's a good sign. So that I think are the key prices, the 45 cent. Hopefully that'll act as a magnet for the market, that director buying, and then the 37 cent support. And you'd really want it to see it hold above that support line. If it broke that, then you'd be probably heading back to the 30 cent, I think. But I think really that 45 cent line is yeah, that's going to be a key. That's one of the key prices, I think. And I'm hoping this is the market agreeing with us here. These couple of hammers here. That and you can't read too much into hammers, obviously, but around that director buying, I think they're the buyers are putting up a fight. It's not like up here where there's no fight at all. It's yeah, there's a bit of a battle, a bit of a battle going on there, and it's I'm going to look at the volume. See the volume on that hammers, and volume. They're more reliable on volume. So there was a bit of a battle happened there on those two at those 2 points there, and then it's sort of gone up a bit. And so for me, as far as I'm concerned, that's well, it was cheap. It's cheaper buying there than up there, but I thought up there was pretty good, So and nothing's changed, so fundamentally. So I'm happy to hold that and see what happens. And see what ride out this fallout from that subscription. Anyway, that's my thoughts.